Good morning. It is Wednesday, um, February the 11th. It's about 6:30 in the morning, and I wanted to give you an update on what is called explaining pullbacks. Um, so as we look right here, I want to look at some markets that we came up with some order entries in, and I want to talk about pullbacks because this is very important. At 6:30 in the morning, like we look at these Bitcoin, sometimes the market is not actually opening, and the market may have went as far as down right here. So we put a Fibonacci retracement on this swing, and this gives us possible pullbacks of where the market might pull back. This one yellow line right here is actually where we were supposed to get in, and this red line right here is actually um, the stop loss. But I really actually want to say that this dotted line right here is our new entry based on the pullback. So if you look right here, let's see if we can come over here. If we look right here closely, this is our original entry, and this was yesterday. We got in here. It did get us in this market, right? But if we would have got in right here, our original stop loss was this one, where the pullback is. We would have been stopped out, done. But since we moved this entry right here up to this new, what is called entry, because that's the pullback, and then we created another stop loss right here. So if you look right here, it gets us in the market, handles the pullback very nicely, comes back down to our original entry, kind of comes back up, and then look what happens. Bam. Takes us all the way to our take profit. That's a successful trade, and that is an examples that I'm trying to show you how important pullbacks is, because when this market opens, usually, and you look at the time, let's look at the time where this big juicy red candle right here. You see that? Well, the time is about 12 o'clock yesterday when that happened. No, actually, it happened. It started going on the move as early as what? You see that 9 o'clock? Here's 8 o'clock. It's on the move. The market is opening. That's a sign people are getting in the market. Look at that. Bam. Handled our pullback. Then it exhausted itself and started going back to the regular way. So pullbacks are very successful. Let's see how many. We had like 8 trades yesterday. So let's see how many we actually got on our pullback. Okay, so here's another one, which is this wasn't Bitcoin. This is Ethereum Bitcoin. So we can say in theory that our pullbacks are really effective for our cryptocurrency. Again, this is we're shorting the market. We're going down, right? That's why we have this arrow right here. We used our Fibonacci to come up with our concept of here's a swing. I calculated the swing to go all the way up here. Remember, and if you go to my YouTube videos, in one of my subjects, I talk about swing, retest, and retrace. So here it is, and there's a rule for this. There's a swing, right? There's a retrace back down, but it swings back up. And if the swing is always higher than the retrace down, then that's still a continuation. Here it is. It swing down in the retrace all the way up here. Swing down and retrace choppy, but look right here, right there, still just above there, so it's considered still a swing. Swing, retrace, still going up. Swing down, retrace, still going up. Swing down right here, and then boom. Even right here, boom. Now, technically, in theory, this may should have been right. Let's put it right there, but it doesn't change that Fibonacci. And so you see the 50, you see the 6.1 and the 382. These are Fibonacci levels, and you see it's still on 786 right here. That's still our entry. Okay, and so now we're in the market. Now here, if you look, it didn't quite go all the way. That would have been a stop loss. So this trade didn't really need the swing, or could it have been our swing was a little off? Maybe our swing needed to be right, let's just say here. Maybe I didn't need that. And if that was the case, we could have gotten in right here. That's where we made our mistake. our Fibonacci number wasn't right, because there it is. Now you look at this 786 and you come over to here, look what you see. Boom. That would have gotten us in the market and we'd have been heading out. And remember, our rule halfway down, we would have taken our rations and then waited for it to finish here. So we would have been already had money locked in. Okay, let's keep going, because again, I feel like I'm giving a lesson more than I am trying to give you the market entries that we did yesterday. And but I have to do certain things to show you how important it is. It is important that we use these, and these are the things, if you follow me, once this 30-day phase is over with, you would have seen these late entry types of pullbacks that we will be doing, and you would have known to switch it from your original, which is here, to your pullback. And so if you look right here, here's the original, and there's even though, I believe right here, this is the original, we would have got pullback. This is our old stop loss, which is now our new pullback, because it's based off our Fibonacci retracement levels, and we can see them right here. And so because this is going up now, our pullback is down here. So look, we see right here our pullback. The original entry was right here. If we would have came here, we would have been stopped out. So right now, technically, we're not stopped out because we switched this original entry to our pullback. So as of yesterday, the same day we got in, apparently the same day, it came all the way down to here. We actually got in here. The market didn't open up. The reason why it says 8:30 right here, because this is Nvidia is a stock, and the market doesn't open up to 8. Remember, we were putting this in over here around 6 or something like that, 6 o'clock or something. So anyway, we would have been over here. The market hits us, right? It comes up to our original entry, and then it comes back down. So if we would have been here, we would have been down. This is our stop loss, our new stop loss, but we're anticipating this market is going to go all the way up right here. Okay. Let's keep moving. Let's look at Tesla. Tesla, we shorted the market going down, and you can see clearly, here's our original entry, right? And here's our stop loss. Where we got in this market at on Tuesday, I don't actually see when we got into this market, and that's kind of strange to me, because we got in somewhere around, again, this is a market opening up at 8:30 as well. So we got in this market somewhere, I want to say about right here. We got in this market somewhere about right here. Let me just put our line here so we'll know. Got in this market somewhere about right Tuesday. Right here, right? And as you can see, it hasn't actually, this is the original one right here. Get in this market right here. This is a stop loss, and we're going to come down. So if you can see, this actually hasn't even hit the original stop loss. There is a swing up, so and we're going down. So in this case, our pullback, the swing up, and we're going down, I think it was based off of this swing coming down, which is this pullback. So I really don't think this even really necessarily needed one, because we're going down, and here's a swing down, it's already swung up. But however, I did put it up here for some reason. I did put it up here because the extension of this swing up. So I'm anticipating it comes here and then coming down, and so that's just keep us from getting kicked out on this stop loss right here. Let's see how that works. Let's go to another one. Okay, so we didn't get in silver. Oh, we did get in gold. Let's look at gold. So we can see this is, we got in gold going up. We got in on this day here. Again, this is our original, right? going up, and you can see it already hit the green. So if we would have stayed with the original, this would have been a successful trade as well. But this is, we did do the pullback right here. Anticipate. Why? Because here's the original stop loss, that little red one, and look at that candle there. It hit it. We would have been stopped out. So it's good that we did, even though we didn't get in the market, we didn't lose money. So that's considered a good trade. You didn't make money, but you didn't lose money. And what saved you? The pullback. And that's because of this swing right here. See that swing going up? And we just did the swing, retrace, retest, retrace, retest to right here. Because then I stopped it right here, because when it swung down, it came back up. It never came actually over that line. So that swing was over right here, right? So that was our pullback anticipation. So in theory, we are not in this market. This market still is in play. So it could come this forward down here and then boom up. All right, let's see if we can do some more. This is going to be a long video based on pullback, so I'm just trying to give you a theory of how this works. So we have Shiba, which is a Bitcoin, right? And we can see here the pullback was right here. No, I didn't actually do any pullback to this, because this was in a choppy situation. It was just going sideways. The swing was way over here. But as you look, this market has been going sideways all along. So I kept it the same. And you can see right here where it got us in the market, somewhere right in here. And then look, boom. There's our successful trade. No need for a pullback. That's something else. Again, follow me on the videos and you would understand why I did that, because of this consolidating type theory right here. And that's something, again, part of my Proreadiness videos in one of those chapters, and that's free on YouTube. You can go watch those videos and see that. Okay, we didn't get in Microsoft, so we can keep moving. Let's see. Okay, we did get in the S&P 500. And if we look right here, we can see where the market hits our pullback. We got in this day, hits our pull. This is the original, and here's the original stop loss. We would have been kicked out. So because we took the pullback right here, we're in the market right here, and it came up and came down. We needed to swing back this way, but it's not touching what? Our stop loss, and we're in the market. So we're okay right there. All right, let's see if we can keep going. Here we have another one. Oh, no, we didn't do anything from NASDAQ or Russell. Let's see. Yeah, we did get into micro crude oil, right? We got in this day. As of now, you can see that it would have hit our original right here, but here's our stop loss. That was our stop loss right there originally. We switched it. We would have been kicked out at this point. But right now, we're still in there. Ooh, and it's getting very scary. Look at that. Very scary. As you can see right here, where it hit and then came back down. So let's hope it doesn't hit our stop loss. But hey, that's our Proreadiness. We so far we got more wins than losings, and that's another key. You know, our other wins and earnings will offset this, and that's why it's important to have multiple markets. We get in multiple markets. Imagine using this strategy so quickly in 1 hour that you can do almost. I track 16 markets, but I'm in half of them. Half the markets I track. That's a win-win. A win-win. So that's the whole key to Proreadiness. Don't make me think strategy. You learn it. I teach you. I add on the AI, the bots that make your work go quicker. So that's the way you can perform very well in the 1 hour chart. See, look at that market now. It's on this way swinging now. And that could be what is called a dark cloud cover. Again, in my first chapter 1 through 8, I talk about candlesticks. Dark cloud cover is when you see a green followed by a red. It's called a dark cloud cover, meaning that the market may be reversing. It's a reversal signal. You know, if this closes all the way down here, that's a reversal signal. Dark cloud cover. So, yeah. That's that train eye. Okay, so I think that's it. We got any more? Yeah, that's it. Okay, so I hope I was able to explain more about the pullbacks. They're very important, very effective. Um, Again, that's more of an advanced strategy trading. I want to get you down with the basics that don't make me think. But as you progress, if you want to learn this, how to trade, how to perform a lot better, um, now is the time because we only got maybe a couple more, 10 more days or more for me doing these daily trades. If I have time today, I will be getting out some more trades on the market live, but I just wanted to show you how, you know, I choose to also look at strategies as I make my choices and show you how to switch choices in the middle of choices and and show you how effective, you know. But if you don't get in the market on, say, before the market's opening up, you know, some people just like, that's why they actually get in an hour after the market opens up, and that's okay as well. If you do that, then you know you can continue with the momentum trading, momentum. But I'm just trying to show you how to be able to, and sometimes pullbacks are a very nice chunk of change. I like them. I like pullbacks. I also like momentum trading. But if you got something to do in the morning and you need to take off or whatever, use your pullbacks. And if you're going to be at the house, then you start scanning the market or whatever. You're going to be in front of the computer, should I say. I don't care if you're at the airport. You got a laptop, you know, you're able to look at your markets, boom. You got a cell phone, you got an iPad, whatever it takes to fertilize the right way of living. Proreadiness Trader. Get back at me. Peace.